I hope you're having a sunny morning wherever you are. We are in the Bay Area. I think temperature is 72 degrees. It's going to be today. And I know you're ready for Vinney and Beau show, just like we come every week.
Another Friday in the books. I wasn't much of a runner, but now I started running at the gym because I'm like a little short guy with a lot of muscle, so it's hard to run.
We are Vinney and Beau show coming live to you from San Francisco, the great Bay Area, right here from Danville, Blackhawk. We always come to you on Friday at 9:30 a.m. 9:30 a.m. Pacific and 12:30 p.m. Over there in the East Coast. All right. Good morning, America. Good morning. Happy New Year. Happy 2020. And it's going to be a fabulous year. This is Vinney Chopra, your host, and my co-host, Beau Eckstein. We've been coming live to you on all channels, Facebook, LinkedIn, of course, maybe Instagram too. I don't know. We'll check that. But then YouTube and all these different also. And our guest today, let's see if we show the names. I don't know why the names are not. Oh, there we are. Yeah, Mario is in the house. And we're going to have a great show. We're going to talk about mobile homes, storage units, multifamily. And we're going to introduce our guest in a second. Beau, how are you, brother? Happy New Year.
Happy New Year, everyone. I can't believe it's 2022, but it's been a busy couple days for the start of the new year, so it's good. I set my goals and looking forward to this year. And before you know it, it'll be over like last year.
Yes. And please, everybody joining us, please give your names and also where you're from, and think about some great questions in real estate, in motivation, in loans. I mean, we talk about all these things every Friday at 9:30 a.m. Thanks for joining. It's a pleasure to have you. So let's talk. Hi there, brother Mario. How are you?
Hey, I'm good, Vinney and Beau. Thanks for having me on. I'm excited about this episode, man. We're going to have a blast.
Oh, thank you. And I love the picture behind you. Tell me a little bit more. I love colors. Colors should be in our life always. And this is a beautiful picture behind you, brother. That's
great. It's a cityscape, and it's one that I've moved to multiple offices now. It's one that I really like. So.
Oh, that's great. Let's introduce Mario. Mario Dattilo, right?
Dattilo, right? Yep.
Yes. And Mario has been investing in real estate for over 15 years. He started by investing in single family homes like all of us. That's how we start. And in 2015, transitioned to investing in commercial real estate assets and has built a portfolio of mobile homes, communities, and a little bit of the self-storage side. We're going to dig into that too, because I'm so fascinated with the self-storage. I want to share that with Beau. That's my new goal in this year, 2020, to build from scratch and also buy some great, self-storage. There is a big demand for it. His companies own assets in the Midwest, Southwest, and Southeast United States, and is vertically integrated. I love that, because we're going to talk about that management and all, and also a property management company of manufactured homes. We'll talk about that, dealership. And Mario was born in Minneapolis, all right, in the cool country there.
That's right.
And has lived in sunny Naples, Florida with his wife, Star, since 2011. Welcome, Mario.
Hey, thanks, Vinney. Appreciate you having me on.
Excellent.
So let's talk some real estate, man. Let's do this.
Let's do it. Take us back, Tell us about how you got started. What's your background? And when did you get this whim of getting into commercial real estate? Tell us that.
Yeah, I mean, I started a marketing business straight out of high school, so I actually never went to college, and started that business, did pretty well with it. But something came up where the company that we were contracted by actually filed bankruptcy, and it completely wiped us out. And so we had to start from scratch. And a partner of mine and I started a real estate mortgage company and later a real estate brokerage up in the Twin Cities of Minnesota, and ran that business. I ran the real estate division for a couple of years. And when the market got pretty nasty, and I was helping a lot of investors buy single family homes, distressed real estate, mostly single family homes as either flips or rentals. And my dad had a ton of construction background. He was a builder, custom home builder. He was in commercial construction. And I went to him and I said, look, I'm helping these other investors buy these homes, fix them, and then they sell them, and I help them sell them. Why don't you and I partner up? Why don't I source deals, you oversee the renovations, and then I'll help with the exit, or I'll handle the exit, the sale of the homes. And so we did. Shortly after, we shut down the real estate brokerage, and my dad and I just went and focused on investing in single-family homes until about 2015. We were looking at apartments, and really a banker friend of mine, a commercial banker friend of mine, came to me and said, hey, look, I know you're looking for apartment buildings. This isn't quite an apartment building, but take a look at it. It's in your backyard. And it was a mobile home park. The bank had been looking to sell a non-performing loan, and we had experience buying non-performing loans on residential before. So it kind of looked like an apartment, kind of smelled like apartments. And so I quickly researched up, and we bought that loan and foreclosed on it, took it back, and we owned our first mobile home park. And from then on, we really focused on mobile home parks. We have bought a little bit of self-storage, but most of our business has been built on buying manufactured home communities, and it's done really, really well for us.
Wow. All in Florida or in certain, you said you're all over, right? What are the states?
Yeah, so we own in Florida, Georgia, Minnesota, and Texas right now, and we're starting to look in a couple other states as well. So we'll pretty much buy in Midwest, Southwest, Southeast, and mountain regions.
Amazing. I'll share with you something. My very good friend, I've known him for 14 years, and Prabha Datin, I think is his name. He just texted me last week. He made $10 million in the mobile home park he just sold, and he paid $583,000 for it.
That's
What?
awesome.
I couldn't believe
That's
it.
huge.
And he said, I'll show you the tweet. The text, he said, oh my gosh. So mobile home is really good business. I know I really didn't get into it that much, but I know Dylan Marma, one of our, my good friend, and
Yep, he's a great guy.
3 years back. He's done quite well. Kevin Bupp, I know Kevin also, right there in
Another good guy. Yep.
Yes. So let me ask you, how much does it cost to buy these things? I'm sure our listeners and watchers, because this is a show live, by the way, everybody, please introduce yourself and put some questions in the chat also for our guest. And
yeah, if somebody's invested in mobile home parks, I'd love to see that in the comments as well. Just drop in there like, I've bought a mobile home park before too. That'd be great.
Yes, exactly. And we like to answer a lot of questions, and of course we make podcasts out of this show also, so you'll be able to see portions of it in the social media and all that. But how much does it cost? Give us some spectrum. I know the mobile homes are limited number and they're reducing.
That's right. Yeah. So, it's just like apartments in the sense of it depends on the size, location, quality, and setup of a mobile home community to determine value. It's obviously valued just like apartments in the sense it's valued on a cap rate, so based on cash flow. And, the interesting thing about our industry, and you kind of touched on it, is that it's a diminishing property type. We've got really high demand for affordable housing, yet at the same time, our communities are being redeveloped into other things like apartments or storage or whatever else, because they're sitting in really good locations and they've been there for a long time, and they're often not the most attractive looking property. So other investors buy them, scrape them, and build other things. So while demand is increasing, supply is decreasing, which is just a very unique situation in real estate. Not many other property types have that kind of perfect storm going on. And so I would say somebody looking to buy a really small park could get in for, a couple $100,000. Somebody who wants to buy more institutional assets are, tens of millions of dollars. So just like any other property type.
So how do you evaluate a lot of these smaller parks? A lot of the coaches are owned by the seller, right? And usually you want to separate that. Is that kind of accurate, Mario? I like you want to try to seller finance those and just own the pads. Is that kind of the goal that you also look for?
Yeah, great question. We're getting into the good stuff here. So we've got really two different business models in our industry. We've got this rental model, which is kind of like a horizontal apartment building. The owners own the land, but they also own the homes, and they rent it just like apartments. There's, there are annual leases and so on. Where the other side of the model, or the other model, would be the lot rent model. And that's really what we operate in, where our residents actually own their homes and they pay us lot rent. So in that way, think of us kind of like a for-profit homeowners association. We don't own their home, but we can tell them to maintain their home. If they don't pay their lot rent, which would be kind of like association dues, if you want to think of it that way, we could evict for that and take the home and sell it. On the other end of that too, in our business model, the lot rent model, we're kind of like a developer builder, in the sense that when we have empty lots, we buy homes, we bring them in, we set them up, and then we sell them on site to homeowners. So it's kind of like this hybrid rental and sales model all in one. But yeah, our business model is to not own the homes, which gives us very low turnover. We really don't have make-ready costs except for when we evict and take a home back, which in that case, we're able to sell that home and often recoup some, if not all, or even more than what we put into it. So kind of a unique hybrid business model.
I
So
love that.
Paul,
I love that model. Isn't it true? I mean, then they are the owners of their home and no different maintenance. It's just the ground that we are renting, right? The pad, right, Bo? Is
Yep.
that?
yeah. So to follow up on the original question I had, now question 2 and 3. Question 2 is there any like red flags? I've read that you should stay away from septic and off the grid type of properties. Do you find that, are you buying with city water and sewer, or you not really care as long as if the septic's in good shape?
Yeah, good question.
Yeah.
So you obviously have with mobile home parks, I feel like you get a lot more into the utilities than you do in apartments, just for whatever reason. Probably because apartments have the utilities inside the buildings, where ours are really spread out like a residential development, single family development. And so yeah, you've got your city water, or you have well. Okay, obviously city water is going to be the ideal situation, but well has its issues, but isn't necessarily a deal killer for us. It may be a deal killer for some others. And then on the sewer side, you've got city sewer, which is the best situation, the ideal situation. But then you have septic, which is like individual tanks spread out that leach out into the ground. You've got wastewater treatment plants, which are kind of like a smaller version of what you would see a municipality using, but just a very small version. They're also called like sewage packaging plants. And then you also have what's called a lagoon. And lagoons are pretty much a pond that all the poo flows out to, and then it kind of like they treat it in an open pond. That is something that would probably be a deal killer for us. But right now we own all city sewer. We're buying one right now with wells, but most of our communities are city water and sewer, just because most of our communities are not very rural. They're in major metros or near it, to where they have access. We've actually converted as well from private water and sewer and connected into city water and sewer. And that's a major project, but we've done it before.
So when you buy a new park, and there's a bunch of pads that aren't developed, or maybe you develop the pads. I think I was reading in your bio, you also own a manufactured home dealership. Does that mean when you're filling these pads, you typically put on new homes, or do you bring on old homes and restore them? And then to kind of follow up on that, then do you try to sell or finance them to the new owners? Is that kind of the model that works well for you?
Yeah, I love that you've done some homework. This is good. We get into the details. So yes, we are a dealer for multiple reasons. There is some regulation around home sales and how many you can sell without being a licensed dealer, and in each state's a little bit different. But we will buy new or used homes and bring them into our communities. Right now, because of the price of new homes going up quite a bit, and even used homes, but new homes especially, we are looking for more used homes to bring in and renovate and sell. But we've got an order out right now for a bunch of homes direct from the manufacturers. We buy them wholesale so that we don't have to necessarily pay retail through a dealership. We are the dealership. So yeah, we bring them in, we set them up, and then they're ready to sell to the end buyer. It's very rare to have what we call organic move-ins, where people want to move their home from another place into our community because the cost is so high. And we're in the affordable housing industry, so our average lot rent is around $400 a month. So somebody spending maybe $3,000 to $4,000 to move the home in, and then another anywhere from $5,000 to if you got to develop the lot, it might be $15,000 to set up and get ready. People just don't have that. So we have to kind of take on that role of setting up the home and then selling it from there. Used homes, similar thing, but we also get homes back through eviction, which we sell.
One more follow-up. Oh, go ahead, Vinny, go.
Yeah, no, there's really good question from Jay Patel. Hi, Jay. Good morning. Really nice to meet you here. What kinds of cap rates are you seeing in the market today, Mario?
Sure. Yeah, they've definitely compressed in the mobile home community space, just like every other property type. I would say on the institutional level, you're going to you're going to see 4 caps, 4 to 5 cap range. On the mid to smaller size communities, you're still going to be getting things in the 6 cap range, 6 to 7. Just, of course, it's compressed, and quality, location, whether it's stabilized or not, are going to make a difference. And whether it's on market or off market, keep in mind, if you're buying from brokers, you're typically going to be paying a lower cap rate because it's more publicly advertised and you've got more competition. If you're buying these communities off market, just like any other property type, it's situational, and you may pick up some better deals.
Can you get 80-20 loans or 70-30? What's most common?
Yeah. So Beau, I know Beau is a mortgage broker, so
Yes.
he's definitely on the finance side. So this is right up his alley. For manufactured housing, there's become a really high demand and an appetite for financing them, much like apartments and multifamily. You can get financing from local banks, which is going to be more that 70 to 75% loan to value. But on the institutional side, CMBS, agency, life companies, especially the agency, they'll go up to 80% loan to value. And typically what we do is we buy a community with a local bank. We turn that community around. We make physical improvements. A lot of times they'll finance some of the improvements. And then once it's stabilized, then we go to the institutional markets. Yeah. We finance them through CMBS, agency, or life companies. And we finance them into non-recourse long-term debt.
Excellent. So do you do syndications? I'm in syndication.
I know you are. You're big in the syndication world.
We're very excited to be in that field for 15 years or so. I'm a broker also in California, and I just got the license for life agent also. I can write insurance now. And now I'm trying to get also administrative license for assisted senior living in the state of Florida, because we'll be managing all our assets that we are building under my company, another company I'm starting. So, no, that's exciting. But let me ask you a question then, vertically integrated, is it a lot of work to manage these? And do you have community managers at each park, or how does it work?
Yeah, so I'll cover both your questions. We do syndicate in the sense that most of our deals are Reg D 506C offerings. We've got a very small group of investors that are very scalable, so we're not actively out looking for new investors, but they are technically syndications. We're the GP, the general partner, and then our investors are the LPs. And we're just super blessed to have a great small, tight-knit investor pool that have grown with us and invested big with us. Now, to answer your other question about the vertical integration, one thing that's unique about the manufactured housing industry is in apartments, self-storage, retail, office, industrial, all the other major food groups, you've got a lot of professional management, third-party management companies that you can take advantage of to where you can focus on buying communities or buying real estate and then having professionals operate them for you. In our world, it's not that sophisticated yet. And so we don't have a lot of professional management companies that do very well at it. So all of the large operators that I know, or larger investors that I know, own their own management company and they self-operate their communities. So another reason why that is so common in our industry is because remember how we talked about that hybrid model, the rental and the sales model?
Yep.
It's a
Yep.
little bit complex. It's pretty capital intense. And there's a lot of project management that goes on until the property is completely full and stabilized. So, when you've got all these homes coming in and sales going on, it's hard to, it's hard for the property management company to get involved in that when asset management and ownership is so involved in the property on that sales model side. So yeah, they people think of mobile home parks as being, we just rent the dirt and it's turnkey and it's magic money cash flow. It really isn't.
No. Yeah.
Especially when you're buying properties that need some turnaround involved, but they still need to be managed. And I think I like to kind of break that myth, or crush that myth that they're just cash cows and you don't do anything. They're fairly management intense, especially in the beginning.
Nice, nice. There is a question from Jay again. What's the risk to investor in a syndication investing in you or any other syndication?
Yeah, I think the risk is going to be number one, when you're investing in a syndication versus a fund model. Syndication, you're investing in a single asset, right? Single asset pool of investors versus a fund that has a pool of assets and a pool of investors. Okay, so in a syndication, you've got one asset, and so if that asset does well, you're going to do very well financially. If that asset does not do well, you've got no diversification, so you're basically going to do poorly because that one asset didn't do well. The other risk that I would say is the sponsor. You've got great sponsors like Vinney who have tons of experience and has built a really large portfolio and knows what he's doing. If you invest with a sponsor who doesn't necessarily have that experience and track record, you might be in for a ride that you have no control on. So one other thing that I want to point out about syndications and limited partnerships that people don't often think about from the LP side is that, yes, you may not have control or a vote in what happens. You're not a manager in the deal, and you're relying on somebody else to manage it. But you also have to recognize that you have limited downside. Typically, the sponsor is the one who's on the loan as a guarantor and has recourse, if any. And you as the limited investor, limited partner, has limited downside, only what you put into it, where your sponsor typically has unlimited downside risk. The general partner has unlimited downside risk, where you have limited downside risk. So it's a risk reward thing, and picking a great sponsor can produce great returns.
Excellent, excellent. So true. Rightly put, Mario. I mean, the thing is, I really have seen this 15 years we've been working and giving investors the majority of the cash flow and majority of the upside, 70%,
Yeah.
goes to the limited partners where they give their hard-earned money. I say that. And as syndicators, we have the fiduciary responsibility to do everything in our power to secure and preserve the investment and make more money on top of it. So, fund also, I wanted to clarify that something with all the people watching us also. I've been asked, Vinny, is syndication different than the fund? So, syndication, like you said, it's specific offering syndication with one deal only. In the fund, it's a syndication also. As I see it, it's the PPM, everything, and subscription agreement, operating agreement. But in the fund, instead of one asset, it will have two, three, four, five, six assets in different locations, different group types, all that. It can comprise a fund. There could be a blind fund, which some people are starting. Blind fund is where you don't have any properties yet, but you're going to be having a business plan to talk to the investors. And if you have a good track record, they will probably put money blindly because there is no asset underneath there, right? In our case, and it's a 506c fund. I can talk about it on the show because I teach all this on a daily basis. Is because the thing is, we have $50 million fund going on where we bought multifamily in Tennessee. We are buying Cape Coral, like I said, Mary, the assisted living already built, and we'll be also starting to build multifamily in Florida. And then I'm looking into a hotel to buy that also in the fund. So it's a diversification, model there. Bo, buddy, your
Yeah.
question.
So one additional question before we move on to self-storage. Question, because I know you're a dealer. Have you done any? I'm just wondering because I was just looking at this for myself. There's some. I live in Las Vegas, but there's some smaller cities that are growing around Las Vegas, and they have a lot of land. And I always thought about because of affordable housing, doing land home packages with manufactured homes and converting them to real property. Have you ever done that? And what are your thoughts on that as being a manufactured home dealer for an investor?
Yeah. Have not done it. And there is a model out there. I would say it's a niche of a niche of a niche model where you convert, or either you build or convert mobile home communities into co-ops or condoed out type communities where the residents actually, and so the residents have, in the condoed out situation, you would have subdivision. So all the lots are subdivided out, and then you would bring the mobile homes on, you'd set them up, and then you'd basically make them real property with the property appraiser. So that is a model. Haven't done anything with it. We like the rental income, so the selling off the parcels to us kind of defeats the purpose. In that case, you also have to have an association, and you're really running it more like a single family residential community subdivision. So we haven't done it. Is it possible? Sure. And you see that more in markets like Florida, Arizona, California, where you've got a lot of snowbirds or people who are looking more for lifestyle communities versus affordable housing communities. And so you do see that. And I'm sure in Las Vegas, there's probably some demand for lifestyle type communities. Sure.
Very good. Thank you.
Week I talked about on the text, I just wanted to share with our audience. One of my good friend, like I said, Prabin, I think he's got cash on cash on mobile homes, 4 mobile homes. He sent me the tweet text last week, 1940. 1940. That's outlandish. Oh my
It
God.
is. It's huge.
He paid, purchase price was 2,600,000, and it's worth right now 12,800,000.
That's awesome.
That's awesome.
That's awesome. That's
Good
huge.
job, Prabin.
Yeah, there's great opportunity in the space. As a dealer, and just kind of going back to Beau's comments as well, we don't sell retail outside of our communities. We really use our dealership to sell inside of our communities. But there are other dealers that are kind of more retail, and they sell outside as well. And if you were to do something like that, I would probably look at doing a little bit more similar to us, where you're the dealer and you fill in your own city versus working with an outside dealer to fill it.
Sure.
Good
Can
advice.
I take us to storage units? Sorry, Bo. Yeah.
No, that's good advice. Actually, yesterday on my podcast, I
Yes.
interviewed my good friend who is a 504 SBA specialist, and we specifically spoke about using the 504 SBA loans for self-storage, because up until 2010 or 11, you couldn't use SBA because SBA is owner user, right? You got to
Yes.
be. So they now from 2010 consider, so the 504 loan, it's a little bit tedious of process, as we all know, but it's the highest leverage and the cheapest cost of funds out there. So it's a great tool. And the other nice thing about it is, like if I were to go buy a hotel, I need experience with
Yes.
using SBA for self-storage. As long as you get an approved third-party manager for the self-storage, you can finance with SBA. And that's huge, because you can get, if you buy an existing business with cash flow, you can get 90% of total project cost financed.
That's huge.
I love it. This is exciting. For the last 1 week, I've been listening, watching, researching, and getting very much pumped up to purchase storage units and build them also from scratch. I've been in multifamily field, as most of you know, and I'll be in there. I just want to keep on expanding. So, no, Mario, tell us about how did you get into it, and what are the good and the bad about storage units?
Yeah, we get into storage. I always tell people you should be investing in property types that you feel are going to perform well in the economy you expect to be in the next few years. So if you plan to own an asset for 10 years, you need to be thinking about investing in things that are going to do well over the next 10 years. And if you think the economy is going to be great, then invest in things that are going to do well in strong economies. If you think that the economy is not going to be so good, people are going to be hard up on cash, then you should be investing in assets that are going to do well in that type of an economy. And I would say mobile home communities and self-storage are similar. They both have performed well historically in poor economies and down economies. And we're not super optimistic about the long-term economy over the next few years. So for us, it made sense to invest in self-storage. We like it because it's a similar tenant base to what we're used to, which is, consumer tenants versus a commercial tenant. And there's a great opportunity to keep up with inflation in the self-storage world because you're on 30-day leases and your rates fluctuate similar to a hotel. You've got that variable rate that you can do, and it adjusts monthly. So, and as your occupancy fills up, you raise rates on the units that you have the least amount of availability to. So there's that opportunity to keep up with inflation. There is low turnover cost. So just like us, when someone moves out of on the mobile home park side, when somebody moves out of a home, typically they're selling that home to the next buyer. So we don't touch that unit. We have no make ready costs. We just pick up rent from the next person after we approve them to move in. Self-storage is not quite like that. You still have to, sweep out the unit, trash out the unit in some situations, but it's still a very low cost of turnover, and the eviction process is relatively fast. So we like self-storage. We own a lot less of it, but we will buy more. Like we just bought one earlier this year that it was just underperforming. It was very low occupancy in a great market of Dallas and a great neighborhood of Dallas. And we're in the process of turning that one around. It's a great property type, and we'll buy as many as we can find that make financial sense.
I love it. I love it. One of our, but again, academy student, oh my gosh, Gaurav, I'm meeting with him today. He bought 4 last year, Beau, 4 of them. 2 were in Dallas and 2 in Missouri. I invested in 1 or 2 of them already, but I think we're going to go scale up big, do some partnerships. And I want to start my own also. Yeah.
That's great. I mean, if you know apartments and assisted living, self-storage is going to be a fairly easy transition and learning curve for someone who understands apartments. It's a great business. The difference between storage and mobile home parks too is storage, you have new construction opportunities. On the mobile home park side, it's kind of good and bad. You have them declining, meaning there's less and less of them, but it's also not as financially advantageous to build them. So, I can't create product as easily on the mobile home community side as I can on the self-storage. At the same time, I have less competition on the mobile home park side, and I don't ever think about competition there. Self-storage, I have to be really smart on where I buy because somebody can go build one across the street and empty me out on concessions for 2 years. So
Totally.
Both are
Totally.
great. Both are great.
Awesome. Awesome. What great nuggets you have shared, Mario. It's been a pleasure having you with us, brother. And how can people reach you?
Probably, I would recommend check out my YouTube channel, MarioDattiloShow.com. And I'm on all the different social media platforms. I'd also recommend that if somebody is looking to get into the mobile home park space, my YouTube channel, but also check out MHP Tribe Facebook group and our MHPTribe.com. It's actually an education side of, of mine that myself and two other partners run that basically helps people invest in mobile home parks.
Awesome. Awesome. Thank you again. It's such a pleasure to meet you and really enjoy when I'm down there. We will be opening up Punta Gorda end of next month. And
I want
within
to check that out with you.
yeah, 10 months, we have built it from ground zero to beautiful, beautiful, building. And we have 22 paid residents already. We are not even open yet. Our goal is 30 out of the 88 units. So it's going to be fabulous. And then Cape Coral also, which is just above Naples, where you are. So look forward to meeting you there. Bo, any last comments, brother? And look forward to a great year this year, right?
Yeah, this was a great start. I got some nuggets today from Mario. So I learned, it's great when you can interview people and learn things. And that's what I love about this show with Vinney's motivation. And we're off to a great, we took a couple weeks off. So this is the first one back, and it feels good to be
Yes,
back on air and interviewing great guests. So I'm just happy to be here.
I'd
totally.
love to have I'd love to have both of you on my YouTube channel, do some collaborations. I'd love to bring you both on there and let's do some
Sure.
stuff together in the future.
Let's do it. Let's do it. Anybody watching us also, or those who have participated today, thank you so much. We really appreciate you. This show is because of you, and we pay gratitude to all our followers. The big thing is if you are a great host or speaker, and you would like to, you have great knowledge in the multifamily, I mean, into the commercial real estate. Mostly we are in commercial and also in loans and other things and any kind of to do with the motivation also. Love to bring some great guests on, so that we can bring great value to our audiences. Thank you so much for joining. We appreciate you. See you next week at 9:30 Pacific, 12:30 Eastern. Bye bye now.